Morning, market chameleons. Happy Monday. We're waiting for Dima to get on. Morning, Dmitry.
Good morning, Will. How are you?
Great. How you doing?
Pretty good. How was your weekend?
It's great. It's a little cold though today. I mean, when is this
Yeah.
warm weather going to start coming?
Yeah. Sometimes I feel March could be more brutal than all the rest of the
Oh
months.
my God. I haven't been able to wear my chameleon shirt in
The
months now
t-shirt?
because it's so
Yeah.
cold in my studio, which is in the barn, freezing.
I missed that shirt.
Yeah, we'll have it back soon enough. All right, let's get started with the disclaimer. What do you think?
Okay. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, contact your broker. That's what they're there for, to help answer your questions and provide you with guidance. There's the disclaimer.
All righty. What are you seeing this morning in the pre-market? Anything?
Let's take a look. I think what I'll do today is we'll cover the pre-market report. Then I'm going to move on to looking at options implied volatility. But we have certain charts because some people are, visual. They like to see things in graphs, and I usually don't even reference these charts. So as I was watching, as I was using them, I thought it would be a good place to start today and kind of show people how to visualize what's going on in the option space using charts and graphs. So I'll show you what I mean after we go through the pre-market report. So let's just get started with the pre-market. If you have any questions along the way, Will, anything I'm talking about or anything else, let me know because I'll try to answer as many of those questions as I can before the end of the show. This here are stocks, this pre-market report are stocks that are trading in the pre-market hours. We have the most active stocks, biggest percentage gainers, biggest percentage decliners. I'm going to use this filter to see what's going on in stocks with a higher market cap. So we're taking this market cap filter, $20 billion market cap or higher. We see 23 here made the percentage gainers list, 46 on the percentage decliners list. So from that perspective, a little slightly more bearish opening than from the breadth of gainers versus decliners, slightly more bearish at the open. Couple of them that are making the top of the list, I think that's Deutsche Bank, GE. That's been kind of start to breaking out. I think that's even been increasing as the rest of the market has kind of been declining. That's trading 1.7 million shares in the pre-market hours, up 3.3%. I think there is some news there that they're selling off their jet leasing unit. So that could be pretty good because I think, one of the concerns with GE is that they have to reduce their debt load. Right, Will?
Yeah, it's really interesting. I mean, when we started talking about it maybe a month and a half ago, I think we were talking about the 10 strike, weren't we? I'd have to go back.
I think
and
it was
check.
the stock was around $8 and all this, and we saw there's a big increase in open interest on that 10 strike, especially in the 10 calls. So, kind of like rallied to it and now it just broke through. So that's 40% above. Now that's 10 strike. Nothing else is sticking out at me. We're seeing, some gainers, but on lower volume. I think GE in this list is the biggest volume on 1.7 million shares. RKT up 3% on 500,000 shares. And that's been pretty volatile up and down. So I'm going to take a look at the unfiltered list, unless you have any questions, Will.
Nope, move forward.
And then when you see Deutsche Bank, HSBCs, we saw a lot of those financials making the list in the pre-market, and that's kind of, we've seen that actually a couple days now, especially like the financials looks like there is money flowing into that sector along with the energy. There's a couple smaller cap stocks today jumping in the morning. ANCN up 70% on 4.7 million shares. That's a 24.8 million market cap. Then not getting any information from the headline news right now. EYES up 58%. That's trading 30 million shares, and that's a market cap of 134 million. Looks like there's some news on there on that stock. That's a biotech stock. And you could see most of these are smaller market cap stocks making some gains in the pre-market.
Jesus,
There's no
GameStop's up again.
GameStop up 10% right now. I think there was some. Let me take a look at that.
That's crazy.
So yeah, it was up 4% on Friday, up 10% in the pre-market hours. And just see, looks like what they're going to. I'm not reading the full story, just taking a look at what headline news I'm picking up. And what are they making, potentially some kind of a deal on something?
I think they may be hiring people to lead their e-commerce business.
Okay, is that it? Right. So that's up 10.9%. Let's just see how that compares to its historical gaps. And I know that's been, kind of all over the place. But let's take a look at the 12 largest gap moves in the last 3 years and see what that stock tended to do after the opening. So we're looking at 12 largest moves. These are the dates in the last 3 years. Okay, so we got February 25th, February 22nd, February 3rd, a lot of them recently. These are any notes on that day, if there's headline news, press releases, you could hover over it and read about it. But here are the opening gaps. If we took the average of them, it's 37.9%. So even that 10.9%, that's well below that average. Most of it is coming, from some of these really big gains over here. This is what it tended to do after the opening. From the open to the high of the day, average move was 19.3%. From the open to the low of the day, average move was 17.5%. So you got really wide swings in there, right? From average up 19%, average down 17%. So extremely volatile in that situation. From the open to the close, it drifted more frequently lower than higher. So 58% of the time it closed lower, 33% higher for an average loss of 0.6%. If we took the average move from the open to the close, just to get that intraday volatility from open to the close, if we took the moves and converted them all to positive moves, took the average, on average, it moved 15.9%. So a lot of volatility after the open to the close of the day. Almost 16% on average will move. So that's really quickly GME stock. And again, that's, been a crazy stock.
Actually, Robert Black, who's on most mornings, is an active chameleon in the chat, is saying the board member who was I think he was the CEO of Chewy or the founder of Chewy, who was originally put on the board of directors, 3 or 4 months ago. And that was part of the action that led to this, crazy run. But he's saying he's been being considered to come in actually and work in GameStop, I guess, day to day, updating the strategy for the apps, e-commerce, etc. So,
okay. So is that what triggered the initial short covering and that initial rally?
Well, it was one of the pieces for the people who were communicating that a change was going to take place in this company. When he was hired to the board before, 2 or 3 weeks before you started to see that first initial crazy movement in the stock. Now it seems like, from what Robert's saying, he's being, considered for a more major position running the company day to day, is what it sounds like. So we'll see.
I know I've been contact. I'm just going to take a look really quickly at this GME options chain, but I get emails with people just pointing things out or telling me what's going on. And one of the things that even during these rallies, what was unusual is they have strikes with the stock's like $150 right now, something like that. I think they have option strikes going as high as 800. And even those strikes, let me just take a look. I think it was in July. So you got strikes going all the way up to, here we go, 800. So that's almost a 500% increase from today's prices, 92 days to go. And look at, tons of trades here. Let me just see the open interest here. I'm going to take a look at the open interest. So look at this, the 800 strike, open interest 16,000. And look at the ones in between. So I guess what this is pointing out is that the biggest interest right here is at the highest possible strike on the board. Even strikes in between, you don't see that much open interest. But over here on that 800 strike, you can see 16,000 contracts open interest, 1,900 traded just on Friday. Let me just take a look.
Wow, and the premium is incredible.
Yeah, this is an incredible premium. So this is, I know that's why he's telling me he's been trading this successfully. You might be watching it today, and I do get these types of, questions sometimes is, take a look at this. Is this strange? And obviously I can't really talk about it that much, but you could see here, I'm just pointing it out to you. Here's July 800 strike. That option traded as high as $34 on Friday, as low as $25. You got over $5 million in notional just trading on that strike, right? Open interest 16,300, total 331 calls, 1,942 contracts. And you could see here lots of 2 lots, 1 lots. So to me, just this mostly it looks like, retail flow, small retail flow going into this option. Let's take a look at, I'm going to just look at a historical perspective. So we could take a look at this call, and here's a table of its history. So on January 29th, right? So this is January 29th, when I think the first day that this strike was listed. Look at the closing price, $125, $134. Then it got as low as here, as low as $1.45, $2.15. We're back to 26. So you could see how this, just the volatility in this option alone. And here you could see how the option progressed, from 280 open interest, just keeps going up and up and up. We're at 16. Well, I guess open interest over here was 17,500. So it did come down a little bit from February 24th. But just wanted to point out some of the crazy stuff that is going on in that option alone. So look at that, $155. An 800 strike option is trading $26. It's interesting.
Yeah, it's incredible.
Yeah. Let's take a look at, if there are no questions, I'm going to go and look at some of those charts, the implied volatility charts. No questions?
Sounds good.
Okay. So these are under the options. We have some of these tools over here to compare volatility, straddles, and this is kind of just get a quick visual of what's going on in a group of stocks, so you could kind of compare them to each other. So here, this first chart, let me just close this. This first chart here, this is what it's doing. I have the group set to Dow Jones. So these are Dow Jones stocks. You could drop this and pick a different group of stocks based on holdings in these ETFs, or you could do it by your watch list. But let's just stick with the Dow Jones. So that's my group. And I'm going to use the metric, what the at the money straddle changed by. So not the implied volatility, but actually what did the at the money straddle do from the day before? So if the straddle was like, went out $3, it closed at 330. That means if it went from $3 to 330, it was up 10%, or the other way around. So these are the two metrics right now that I have set to compare, and this is what's going on. So that down here, this long line this tells us the stock return on the day. So for example, Goldman Sachs was down 0.6% on Friday. So that's why it's below this price change of 0. JP Morgan, that was up 0.2% on Friday. So that's why it's on this side of the price change. This axis over here, that's what the straddle did. So if the straddle in the option was higher, it would be above, it would be above this line. If the straddle lost money, it would be below this line. So what do we see here? That Goldman Sachs, Bank of America, in this Dow Jones, those were the only 2 stocks that were down on Friday. And those straddles also lost money. So that's what happened in Boeing. Is BA, is that Boeing?
Well, yes, that is Boeing.
That's Boeing. So Boeing, you can see here, I'm hovering over it. Stock was down 0.7%. The straddle itself also declined by 7.4% on the day. That was the strike that we're referencing, the 220 strike. We're in a March 19th expiration right now, next monthly. Then you could kind of see, this is what the current call midpoint is 10.05. Current midpoint of the put is $6.93. The day before, the call was $8.90. The put was $9.43. So that's really quickly just showing you how the straddle and the stock behaved that day. And this is updating throughout the day. You know, of course, we have 15-minute market delay data, but this is happening throughout the day. So even in the middle of the day, you want to see what's going on, where things are clustering, where are the extremes. You could come and take a look at this. So here is telling me CVX. So that CVX was up the most in the Dow Jones, and that straddle gained 12%. So CVX was up 4.3% on the day. That was the biggest gainer in Dow Jones, and the straddle made 12%. Cisco, that was up 3.8%, but that straddle gained the most in the Dow Jones. So that straddle gained 28.8% from the previous day. So that was the biggest straddle gainer. Okay, so that's how you would read this chart. So let's say we wanted to take a look at the out of the money calls, 25 delta calls, take a look at those. So that was a straddle. Now we're going to just take a look at the wings. So here, CVX up 4.3%. Those out of the money calls gained 116% on the day. Intel, that was up 4.1%. Out of the money calls gained 102% on the day. So you could see the call closed at $1.35. The day before it was 67 cents on the 61.5 strike. So I'm hovering over it, and you could see the details over there. So that's giving you a picture from, visually, you could kind of see where things are clustering, where things are moving on the ends to the upside and to the downside, and where are the straddles performing the best to the upside and downside. We could also take a look at just the implied volatility changes. So where did the implied volatility on the March 19th expiration go up the most, down the most? So here we see again, these here are the stock performance. Here below, and over here on this axis, this is at the money implied volatility. So we see Amgen had the biggest at the money implied volatility change to the upside, up 3.7%. So stock was up 2.6%, implied volatility up 3.7%. Biggest decline in the implied volatility, Procter & Gamble, looks like the stock was up 3.1%, implied volatility was down 15.1% on the day. So this is giving you a really quick view of what's going on with implied volatility versus what the stocks are doing in the Dow Jones stocks.
D, can you just go back and show how you got to that page from the landing page?
Yeah, so on the options, it's from up here, the menu options, and I'm clicking right here on Straddle Compare. Okay, so this one under this tool, Straddle Compare. If I click here to this next tab, this will show us, actually, I'm going to have to hit reload. On March 19th, this graph is showing us the straddles, the price of the straddle, dollar price below, versus the percentage as it at the percentage as of the stock price. Okay, so whatever the premium is divided by the stock price. So we could see here on a percentage basis, Nike is the highest percentage premium as a percentage of stock price. So the straddle is $9.38. That represents a 7% move in the stock on the March 19th expiration. So Verizon here, that's shown us that it's one of the lowest percentage. So it's about $1.70 for the straddle, which represents a 3% move. You know, we got Boeing up here. That's a 7.5% move, $16.75 for that straddle, 7.5% move by March 19th expiration. Then we got here Goldman Sachs. That's a 5.2% move. So you could kind of see where the percentage moves are clustering around the percentage, kind of like right here around the, I would say like the 4%. And then we could see here where there are some higher, you know, where the highest and lowest percentage straddles as far as percentage moves. Does that make sense?
It does.
Okay. And of course, we could change this around. We could take a look at maybe, let's take a look at technology sector. So no March 19th technology sector. So we got here, this one sticks out. So ENPH, we see that straddle right now is pricing in, it's $19, which is 13.3% move by March 19th expiration. Another one, LRCX, that's an 8% move. Some of the lower ones, FLIR, I'm hovering over here. That's a 3% move. That straddles $1.66. IBM, 3.6% move. That's $4.48. Again, that really quickly, it's a visual to compare a group of stocks and see how those straddles compare to each other. Okay, so that's this straddle by premium. And then we have the changes over here, how the straddles changed and how the straddle and what the straddle premiums are versus each other. Is that everybody okay with that so far, Will?
Yeah.
All right. Another tool over here I'm going to do is a volatility compare. Again, this is for people who like visuals and compare a group of stocks versus each other. Again, I'm going to start out. The comparison group is the Dow Jones, DIA. Okay, this is my comparison group. I'm going to create a baseline because I want to compare how the implied volatility is versus the previous day implied volatility. So my baseline is the previous day's implied vol. And here we could see that, for example, Boeing here, right? I'm going to hover over it. Hold on, can't, for some reason my hover can't get it. So here's what Boeing did. The implied volatility, the day before, the previous day was 49.7. Today, 48.9. So you could see it's below that baseline. That's why it's in the red. So it dropped from the previous day. The ones that are up from the previous day would be in the green. So like here in Amgen, we see that implied volatility on the day increased from the previous day. So the previous day was 28.5. That implied volatility increased 29.3. So this way you could kind of see really quickly within the group which stock, where implied volatilities are going up, where they're going down, and by how much relative to the previous day. Does that make sense, Will?
Makes a lot of sense. Yep.
So let's say we wanted to do a different measurement and say, where is the implied volatility today versus the 52-week average implied volatility. Okay, so I'm changing this baseline to the 52-week average and hitting reload. So this is now comparing the most recent IV to the 52-week average IV as the baseline. So that's what this baseline is. And now we could see if anything's moving far away or extreme from its 52-week average. So over here, for example, Nike, implied volatility is 37.6. The 52-week average is 33. So we see that's, 4.3 clicks above it. 4.6 clicks above it. Sorry. Here, Boeing, even though it has one of the highest implied volatilities in the group, right? Because it's all the way out here. So we see that Boeing, let me try to hover over. So we see Boeing's implied volatility is 48.9, which is the highest in this group, but it's below, you could see it's still below its 52-week average of 56.8. So that's what it's telling you. Boeing's the highest, but relative to its 52-week average, it's sitting below it, right now. The ones that are above it will be in the green. The ones that are below their baseline or benchmark would be in the red, right? So like over here, Verizon, even though it is the lowest implied volatility in the group, which is 19.6, it's above its 52-week average of 19.2. So that's how you would read it. And then you could kind of quickly get a sense of where things are popping away from their baseline, right? And where things are clustered. So we could see here that the implied volatilities are kind of clustered around here, around the 2730. Then we got some up here, 3537. But most of them look like they're slightly below their 52-week average, right? A couple of them above the 52-week average, only like 3 of them. The rest of them are below. And this kind of tells you how far below that baseline. Let's take a look at another baseline. So how far are they from their 52-week low, the implied volatility 52-week low? So I'm going to change that baseline. And this is how far away they are from its 52-week low. Right, so we got WBA probably looks like that moved away the most from its 52-week low to the upside. Some of these, the closest to the 52-week low, maybe TRV over here, AXP. Let's see from the 52-week high. Changing that baseline. So you could see still we're pretty far away from the 52-week highs, right, on all of them. So there's lots of room there to get to the 52-week high. Hopefully that was helpful. Any questions there, Will?
No, a lot of thank yous. Thanks for showing them where this page is. Thanks for explaining it.
Yep.
Great job, dude.
All right. Well, I think we're heading up right up against 9:30. So if there are no questions, I'm let you go.
Awesome job again, Dima. Listen, everybody, thumbs up, as BBK just said, are always appreciated by the Chameleon community. If you're new to the show, make sure you subscribe to the YouTube channel. D, no webinar tonight. That's correct, right?
Yeah, we're gonna skip tonight, but I'm going to be working on one coming up on fundamentals as we start to release some of the new features. So I'm gonna be working on that one, and once we release them, I'm gonna follow up with a webinar on that.
Well, and you basically do a webinar every morning. We just did one on volatility comparisons. Awesome job.
Yeah. All right.
Great job.
Thanks.
Thank you, Chameleons. Thank you as always, Dima. Everyone have a great trading day.
Thanks, everyone. Have a good trading day. Stay safe. Hope to see you tomorrow.
Trade in peace. Bye.
Bye.